Hello guys. Well, another video for the series how to trade, in this case small pullback trend. This is the kind of video that I'm doing basically when we have a good pattern or type of context that we would like to show how we can trade and take advantage of that context, right? And a small pullback trend is a kind of trend that is sometimes tricky to get in. So if you have a great day today and you want to see if your entries and your their management was according to what you were expecting, you can see this video and compare with that. And if you have a bad day and you were blocked and you were not able to enter into a trend like this, it's a strong trend, and you didn't get a good setup for doing that, you can also try to see where the entries that I'm recommending here, what were my trades, right? What I'm doing here. And I have to tell you, this is 5 minute chart what you're seeing here, but I also use 1 minute chart to enter. That's sometimes you don't see there my entries. Some are a little bit different, the entries, but then when you use 1 minute chart, you can see how and I'm trying to anticipate entries using 1 minute chart in a strong trend like this. So today was a great day for me, a great green. Hope that has been for you too. But remember, before watching the video, click and like button. It's important. This is I'm doing this in a hot pace. No, it's for free. So please support my channel, um, and in order that we can grow and continue doing those videos. Okay, enjoy the video. Let me know any comments in the comment section in YouTube, and until the next one, thank you. Let's make a quick recap of the day, and I'm gonna try to make it quickly and explain, how to trade this, let's say, small pullback, and I tell you why, and I'm categorizing this as a small pullbacks in the way. But what is a small pullback? It's really a kind of trend that is really hard to get to enter, because you feel that always is trying to reverse, and probably you will find some opportunities, or yeah, to make some trades on the sell side. But so most of the time, it doesn't drive you to a good profit, right? So it's hard for the short side to make money. So that's basically what is a small pullback. So the pullbacks are so smaller that you're not able to make money from another side, right? That's basically that. Another characteristic of the small pullback are the gaps, swing gaps. So the swing gaps are not tested, like this above 25, like this above 3. So they're not tested. So they keep open. So we makes a measure move, at least the first gap, right? Or the cumulative ones, right? But that's another story. So today, in terms of evolution, we started with an opening range, with an opening gap. I would say that it's a huge gap from this point to this point. It was about 25 points, right? It's a huge gap. 25 points is about 40% of average to range for a day. So it's a huge gap, right? And then we have follow through in bar one, and we try to reverse in three. So three is a good short, right? Because the bar went above and then closed it close to the low. but it was not enough to reverse one. But I took the three in short. I will show my trades later, but I took the three in short. It gets 10 points or so here. So we at this moment we had B3 traders making money here, I think. Yeah, they make money at the beginning of the day, right? Bears. Here we were the 50% of the gap here was closed, but five didn't touch it. And that caught my attention, and I didn't get into a trade here. I was short here and keep it short, right? And then waited for the L2 trigger in order to see if we at least revisit the 50% here. That we didn't do it, and that's the key, right? For the rest. But B6 is an inside bar, so if you are short here, nothing changed for you because you're looking for at least in the three here. You have for the 50% of this leg, you're looking for second leg down. But the seven, when the seven came up, I already said this is trading range. So at least trading range. So when seven closed and it was short here, I say at least I'll try to get out at 50% here. Nine was one tick above 50%, I think. Didn't get it when we measured from here to here, where the bulls started to enter until the end, the final buy here. So 50% is about here. We didn't get it too. So what's happening is those bears were trapped out here in 10, right? Basically, they scale in here, right? They scaling here more, and probably this is the exit, right? Let me see. So tiny, but yeah, that's the exit of 50%. Let's see here, or the cumulative entries, right? But then, of course, when this 13 happens, it give again, so those sellers trap out, and then that's why it accelerates up, making the breakup of the opening range. So if you are short here and you're short here, you probably are getting out here with one tick, right? With one tick, um, one tick profit, and that's why 10. So if you are getting here, selling here and selling here, you're getting out a break even or even one tick profit here in 12. But 13 happens, and then you know the trading range break. So we have a failed L2 here because this is a L1 and L2, or you can consider this L1 and L2 too. It's a failed L2 and a H1 bull flag here in the 13. So it's a good buy here. I don't remember if I have a bot here, but I'll take a look. We'll talk a look. I mean, in my trades. Tight channel because we have small pullbacks here. Tight channel and wedge 1, 2, 3. But then we can start to count again after 12. 1, 2, 3. Pretty much the same thing. It's a wedge here in 24. 3. And then you have L1 and L2. But with this tight channel, come on guys, tell me that you're gonna sell something here. I don't think that is worth it to sell. I think that is more important this time then to wait for testing the moving average and then buy at 32. So it's not worth it this time to get that sideways pullback here. And we will know at this time that the first tentative of reversal is going to be a minor. So that what's happened. So wedge, we spec after a wedge, two legs down, starting 25, right? One, two legs down, or sideways. This is more sideways than down, right? So you see here, The low of 24 is this 35, 31 closing above low of 34. So and then 32 came up. This is a good H2 bull flag, and then this is a signal bar. So there's ways. There's three ways that we can operate a flag, right? One is the FBO, so we can, for example, buy below 31. Another is with the signal bar, so we can buy the signal bar 32. It's more a little bit more more confirmation, and then the breakout of the flag that's happened basically in this trending line, so above 36. That's a breakout, right? So we have a trending line here. 36 is the flag breakout. So there are the three types of entries for a flag like this. I really love H2 bull flags. I think that's a really great trades with a clear target here, for example, in 25, and then you can get it below 31 and get these points here. It's easy with a great probability, especially when we're touching for the first time after more than 20 bars, 30 bars without touching moving average, right? And they accelerated up, right? So tiny bars, yeah, but it's just bull bars and dodges, right? So it's a micro channel, strong micro channel. I think that we have a, yeah, it's a micro channel. And then 44 was the first one going down, but you know, closing in the lows. I didn't like 44 to be honest. Was a little bit high. And then we have that's micro channel. We have an L1 here, right? L1 here in 50, also trigger, and one with a signal bar here. We might buy here. This is an H2. We might buy here above that bar. Doesn't matter that we have that 50, but this is a good entry, H2. But it makes a TTR here, we see here. So once we have this TTR already defined, we can buy in the close of 47 in 52 to get the wedge, or even in the moving average trading the channel line here. So that's the way that we can get a wedge flat. So we fade this bar, or we put a limit order below 48 to get the wedge, or we got the breakout of the flag right here in 53. Those are the ways. And then we have the 57 in a wedge, 1 2 3, but it's a exhaustion gap here in the 57, right? So it's a taking profit bar. So we see clearly that. I missed that because it was busy, but we see, oh, look at this. 57, what is the target at exhaustion gap? The bar itself down, exactly in the tick, right? So that's the magic of price action. Tick is 62, you can even put a limit order to buy here. But okay, 1 bar, 2 bars, we expect activity L after exhaustion, we expect activity L, and that's what's happened. 1 2 legs down. So starting 58, finishing in 50 in 68. So starting 64, when we have this 61 failing, we can buy below 63 here in the close of 61, right? Or even wait for the close of 64 to fade that bar. We can buy this H2 in 65, or we can buy this H3 in 68. That is the final bar of the TBTL. And then trend resumption, looking for that magnet here. We have those magnets targets there. So it will be, as I say in some social media, it will be a low probability event not to get those targets. We were so close there. We're 8 points or less getting to this target. This is an all-time high resistance here in 5333. So we were looking for that. Key bars here. Bar 13 is set the market always in long and buy the close. And you see, you can buy any of these bars until the bar 24. You can buy all of those bars. It's by the close market. It's a breakout. So the start, the wedge, the first leg started here, right? Pull back 32, and then second leg out, second leg up. So you can make this thing like this, and the target is basically there. We have exhaustion. There was the first target. That's why we have there. We have there taking profit activity, right? Again, repeating. This is the leg, the breakout leg. So it's this first leg up. 1, 2, 3. After the breakout, so we start the count here. 1, pull back, 2 legs. Of course, this is the second leg, and then pull back the third leg is a wedge. Okay, and we'll have another wedge here. So, couple of wedge, leg 1, leg 2. This is a good exit in 57. Okay, that's basically the day. And here, so not about the stop. Stop is 5 eventually when you are entering in 10. When 13 happen, stop is 12 because it's a breakout, so you don't expect bars coming back there, right? The protected stop is here, and then you have here is 12, 10, 12. You are far from the moving average, so you keep 12, you stop, and then the wedge, you expect you can use the 20 as a stop because it's a breakout with gap. Okay, this gap, so you can use that 20. It's a good bar with flow through, so it's a good breakout. And then but we have a swing gap here, so you need to be careful. Cool goes here, but 20, it's okay. It's a breakout bar. And then you have a 32 when the flag was breakout here, 35. So that's the stop, technical stop. We never get hit there, right? Market goes up, wedge, bull flag. This became stop after 53. Right? New high, 52 continues being your stop. And then you have TBTL. Once we have the TTR confirmed, 62 is the stop. Before that, 52 is the stop. Right? Even considering that the 58, the 57 makes a measure exhaustion gap target here in 62. So you can keep it here until you have a good bars. But then when 70 happens, breaking out, that 70 is a stop at this moment. You can put it in 68, but then when 73 happen, the 70 it's enough as a stop because it's a breakout. That's basically how your stop loss will work. Here, this trade here in the close of 58, that was my exit from this long. It's just to look for 2 legs down. In terms of cycles, you see we see an opening range here, but it's basically a bear channel here. It's just a flag, right? It's an H2 flag here. Which one? H2 flag. It's a pullback from the huge opening gap. So it's an opening range, of course. We can consider an opening range, but it's also a flag, a bull flag here. And then it's above through a tight channel. Let's see, small pullbacks, L1s failing, right? Giving some micro gaps, and then what makes the more deep pullback here that is sideways, it becomes a broad channel. But within that broad channel, we have this micro channel, we have this wedge, sideways wedge, it's kind of expanding triangle too. So we have different patterns that we can think how to trade those ones, each one of them. The good news is that this could be anticipated, so you can be prepared for here and say, well, I'll wait for the two legs down and see if it's gonna test the moving average as it did. So you can be prepared for that. Here, once you have 1, 2, or 1, 2, 3 in that channel line, you can anticipate this entry in the limit order of this fade, right? Basically, right here TVTL, and you can anticipate a TVTL after a climax like this, and you can also anticipate when it's gonna end, like 68, or buy here in 64, thinking that we already have two legs, and with this 62, this 61 sellers below 61 is gonna get out, and test it. So all those trades you can anticipate and be in the right path. We see here some pressure elements like this. So explain micro gaps, swing gaps, 1 and 2 swing gaps. This is extremely strong. So we cannot ignore that. Even when we are here, that is more sideways price action, we cannot ignore that we have this pressure behind in the left. So market continue being always in long despite the more sideways pullbacks that we have. Okay, that was the day. As Al Brooks says, always say, days like this needs to be leveraged. I did 50 points net for the day. This is really amazing. 90% of profitable trades, and I show my trades right now. Basically, I did buy in the formation of 1, get out in the close. Then I did sell 3, right? I did sell 3, and then get out above 13. Stop it here, 7.75 points, and then immediately buy, right? And buy more below this 16 micro channel. You buy more below, right? And then I did exit in this when this L1 happened after the wash. I did exit in the close 27. Basically was my first trade there. And then I wait, and what happened? Wait for the breakup of the flag. Buy, breakup of the flag, exited here. I don't know why I did exit there. And they buy more about 43 and keep it, and then exit finally here in the close of 58. I did miss this exit because it was busy, but that was it. That was the great exit, I'll say, in the close of 57. And then I bought again the L2 here. All right, I bought that one, an exit in the 77. And then I did exit finally in the 80. So I missed some points because I was here in all this. I was with the one contract, and then I get this part now. So I missed like 10 points, let's say, right? My exit will be here, so I miss 7 points from here to here. Basically, is that. Because I was in the formation of this bar, I was thinking that could go even higher. It was keeping there, and the last time it's reversed down. So it was a surprise, this 79. That was my day in terms of trades. 10 trades, 9 profitable, 90% profitable trade and 50 points to pocket. Thank you very much for watching me, and don't forget to click the like button. Thank you.